Right. Good morning, student. Good morning, student. Can you guys hear me? All right, good. Guys, why is your attendance is so low for this class? We only have like 30 here. Where's the others? Ah. All right, so can we start the class? Good. Uh-uh. All right, so today we're going to cover this topic 9. Actually, topic 9, this topic, comparative banking markets, they will have two parts here, topic 9 and topic 10. Okay, so we go for this part 1 first for this week. All right, so okay, next slide. All right, so now we are looking on the UK banking structural features. Right, so as we know, right, the banking institutions there has fallen from 600, right? Okay, from 1985 to 346 in 2005. Okay, why? Because they are consolidated here. Okay, look, the declined number of banks are due to foreign banks acquiring small UK investment banks and consolidation. Guys, what is consolidation means? Consolidation means what? Can someone tell me what is consolidation means? What do you understand by these points here? Consolidation means what? Anyone? Hello, 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 hello. Huh? No one? Guys. Yes, consolidation means what? Wong Jun Yong. What do you mean? Yes, yes. Consolidation means? So what do you understand by this second point here? The declined number of banks are due to foreign banks acquiring small UK investment and consolidation of domestic retail banking. Okay, combine, all right? They combine all the small bank, okay, of domestic retail banking. Okay, so that is why the numbers of the banking is declined, okay, from 600 to 346, okay, in 2005. Okay, so and this also stated here, the major features in financial system is what? It's investment banking. Okay. Okay, the major features here is the investment banking. Okay, so why they decline from 600 to 364? Because they consolidate, all right? They combine from small UK investment bank of domestic. Okay, so they combine together, all right? So investment banking is limited by US and European banks. All right, good. All right, next. So we're looking on the structural features of this UK banking. All right. So it comprises of what? Okay. Investment banking comprises of corporate finance. All right. Corporate finance and other forms of structure. Okay. They also have security trading. Okay. Security trading, which is you buy or to sell. All right. Okay. So this is the investment banking. They also provide the banking services, yes. Okay. And of course, the treasury dealing and financial engineering. Okay. So they also have the investment management. Okay. That's it for these structural features of investment banking. All right. Okay. Branches, ATMs, and employment. Okay. So as we just know that it is declined from 600 to 346 in 1985 to 2005. Why? Because of what? Because of introduction of ATM. Right. Okay. Introduction of ATM. Right. So before this, it's hard for you to withdraw. You have to go to the bank. Okay. And withdraw it manually. Okay. If you want to make it a fund transfer, you have to do it through the counter. Right. So now they are introducing ATM. Okay. Automated teller machine. Okay. So that is why they decline. Okay. The numbers of banking system. All right. Banking. All right. Electronic fund transfer at point of sale terminal also grew from 4,640 in 1983 to 8,984 in 1987. Look, okay, how it increased, all right? Electronic fund transfer between 1993, okay, to 1997. Right. So it grew, right? Electronic transfer, right? So why they have this shift, okay, of ATMs and electronic fund transfer? What are the reasons here? Of course, the desire to improve the operating of efficiency. Yes, okay. So you can do it 24/7, all right? You can do it outside the traditional banking hours, okay? Before this, you have to do, okay, when the banking system operates, okay? Now you can do it, okay, after the operational banking hours, right? And it is efficient, it is faster, and it is easier and also convenience to the customer. So this is the reason why they have this electronic transfer and ATM machine, of course. Okay, guys, you have to remember it is at the year of 1993 to 1997. I know when you were born here, everything out there. So how this ATM changed the banking style? Same goes to the shift, the introduction of internet banking. Right. So before this, people go to ATM to transfer. Now, everything is online. Same to what is happening during 1998, 1980. Okay, until what? Until 2005, right? Because the introduction of ATM and so on, right? Guys, are you clear? So that you have to know the root. Okay, the root of how this ATM evolved. Guys, are you with me? Okay. So why? Because of what? Operating efficiency, and you can access outside the traditional banking hours. Okay, clear? All right, next. All right, now this slide discuss on the performance of the UK banks. All right. Okay. So it's stated here, it has been among Europe's best performing financial firm for over the last decade. Okay. Why? Why they become best performing over the last decades? Because they have benefited from a buoyant. Guys, buoyant means what? A strong, something like strong, okay? Strong domestic economy, okay? Because of they have strong domestic economy, so they get benefit from it. Right. So they have a strong domestic economy, so it benefited the UK banks. Okay. And also they are able to manage to maintain high interest rates. Okay, high interest margin. Is it clear? All right. So why they become the best Europe's firm over the last decade? Because they get benefit from the strong domestic economy. Okay. And of course, they are able to maintain high interest margins, right? When they have when they can maintain the good interest rates, okay, interest margins, so they can perform well. All right. So costs have been reduced and provision for loan losses have fallen dramatically. Okay. Of course, when you can reduce the cost, okay, so you can get better profit. All right. And they also have lack of foreign competition, and also the reason why profitability has been substantial. Okay. Next is because of what? Lack of competition. Guys, the keyword is what? Lack of competition. Just now is what? Cost reduce, okay? Cost reduce, all right? Next is what? Before that is what? They get a benefit from the strong domestic economy, and they are also able to maintain the high interest margin. So that's why they become the Europe best performing financial firms, okay? Clear, right? So remember the keyword here, right? All right, next. Guys, are you still there? Hello, 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 hello. You can't join the meeting. Why? What's wrong, huh, today? Okay, wait, wait, wait. Cham Shinjin. Others is fine, right? What is wrong with the Microsoft team today? All right. Okay, next. All right, next is all about the sources of revenue. Okay, sources of revenue. Someone is talking. Why? Any problem? Can, right? All right, next, sources of revenue. Okay, so this bank, they managed to generate high level of margins, okay, compared to Europe and Japan. Right. So bank increasing rely on non-interest income as sources of total income. Guys, non-interest income refers to what? Non-interest income. Guys, why I can't get the pointer back? Huh? Where's the where's the where's the pen? Just now I'm using pen, right? But where's the pen? Why it didn't pop up? Ah. Okay. All right. So guys, what is non-revenue income? Okay. Non-interest income refers to what? Okay. Non-core activities by bank. Guys, write it down. Non-core activities by bank. Like what? Loan processing fee. Okay. Late payment penalty fee. That is the non-core activities. Okay, from the bank. Okay. Credit card charges. Okay. Services. Okay, and penalties. Right. So that is the non-income sources, all right, from the bank, right? It is not the core activities by bank, okay? So they can generate high levels, okay, because they are relying on this non-interest income, okay? The trend is interest and non-interest income reflect the cycles characteristic of domestic economy, all right? Because of what? During recession, okay, of course, the demand from loan is low, right? It's depressed, okay? So the bank depend more on non-interest income as sources of income, right? Because of there's no demand from for a loan, okay? Because the economy is not good, because it are having recession. So the bank rely on this piece, okay? Like what? Loan processing fee, late payment fee, credit card penalties, okay? Service charges and penalties. So they rely on this. Okay, this is non-core activities by the bank. Okay. All right. Next, when economy grows, of course, they can demand for a loan. Okay. When economy is good, right? Okay. So they are relying on loan products. Okay. And boost the interest income of total income of the banks. All right. Good. Next, how about the cost, right? So it's stated here, they're successful at reducing their cost of income ratios from 65%, all right, to 54% in 2019, okay, but increased back in 460 in 2004. Right, okay. So these expenditures incurred due to mergers acquisition, right. And other restructuring, okay, programs, okay. Staff cost to total income have also declined to 38%. Why, guys? Why it declined? Because of they introduced the ATMs machine, right? And they have the electronic transfer, okay. They move from traditional banking activities to ATMs, okay, and transfer, all right. Net cost of provision have fallen since 1992, okay, and they also fall, okay, and it will boost the overall profitability, okay. So that's about the cost, all right, for the bank, okay. So how about the profitability? Of course, how you want to calculate for profitability? Income minus cost, and you get the profit here, okay. All right. So, and you have a components of bank, all right, and high margins, lower cost, and buoyant economic conditions. Guys, buoyant means what? A strong economic conditions. Okay. Eraser. Yes. Okay. Right. A strong economic conditions, okay, resulted in increase in loan demand. Yes, right. So when there's a demand, so they can charge, okay, for the customers, okay. Despite during the recession, they only get their revenues from non-interest loan, right? Non what? Okay, clear, guys. Okay, non-interest income. All right, next. Okay, so how about the UK payment systems? Okay, we have this in your tutorial, remember? Okay, so highest numbers of transaction related to transfer between individuals and companies. So what are things you want to transfer from individuals or from companies to companies? Okay, what they use, okay, in UK payment system, they have clearinghouse automated payments system, okay, continuous link settlement, press, okay, LCH automatic system, okay. I guess this is the UK payment system is just only for your knowledge, right. No need to for me, if you ask me, no need to take a serious, okay, for this UK payment system things here inside here, because this is how they deal with when you want to make a transaction, okay. What are the payment system they use, okay, just for your knowledge, okay. Is it clear? Hello, guys. All right, next. All right, continue, okay. And the rapid growth witnesses the use of credit card and debit card. Okay. Before this, they are using check and or cash transaction. Okay. Now they move to credit card and debit card. Okay, right. And somehow nowadays it's hard to most of the company they just transfer online. Okay, or for the check. But few companies they are still acquired check. Okay, for their transaction. Okay. So they are changed from check to cards, right? Okay, right, guys. So this is how this UK payment system works, all right? From checks to card, okay? I know because you're in your generations, okay? You are not using checks to cards. Now everything is online banking. So how it transform from using the ATM machine, okay? you are now using the online banking system. So this is how the evolve, okay, of this payment system. Okay, how this change, right? All right. European banking structural features. All right. Technological development and the regulations. Guys, what is the regulations? The regulations means what? A removal of regulation or restriction. Okay. Removal of regulations, okay, or removal of regulations or restrictions. Okay. Nice tak I tulis with mouse. Okay. Okay. Of a single market, financial service have played their parts in restructuring the features of the European markets. Okay. So it reflected in the decline in the numbers of banks, okay, and it increased the mergers and acquisition activity, right? Okay, it merged, right? It merged. Okay. And it's also stated here, employment for European banking sector, okay, is larger than US and Japan. So it's good, right? The number of employees have been fallen slightly in recent years, all right? And European banking sector employment stood, okay, 2.82 million in 1999, okay, and fell, okay, 2.77 million by 2003. Guys, why? Because of this merger and acquisitions, all right? And because of the evolve of the ATM machines, right? So that the customers are not required to go to branches, all right? Instead, they can transfer everything through ATM, okay? And why the employment is declined, okay? Because of what? Because of mergers and acquisition also, all right? They acquired the banks, all right? Next, technological developments affecting these European banks, of course. All right, now change. Okay, so you remember because of technology, okay, some of the human tasks been replaced by technology. So if you notice that, if you want to pay toll before this, right, everything is using human, right? Workforce, okay? Human force, okay? But now everything is through technology, okay? They just touch their card, right? And you can pass the toll, right? So it evolved, right? Same goes to banking system, right? Evolution of information-based technologies, okay? Information technologies offer saving in cost, yes, right? Saving in cost, of course. You don't need to hire the they need to employ, all right, staffs, okay, and time of providing financial services, yes, okay, and increase the revenue because of what? Because of the cost reduction, okay, increase the information available, okay, and they can diversify into a new business areas, okay, they can offer another products and services, okay, because of this technology, okay. Consequences of technology innovation, they can, of course, reduce the cost, right? Okay, and they can new delivery channels and products. They can come with new products and services. Okay, next. All right, performance in European banking. All right, so it can be vary, okay, from country to country. All right, okay. And it's stated here, some features common to all systems in the growing emphasis on non-interest income. Remember, non-interest income is the generated revenue from non-core banking activities like what? Credit card penalties, service charge fees, and late payment charges, okay? It is non-interest income as a sources of revenue, okay? Okay, so they has experienced declining role net interest income and increasing amount of revenue. Okay, so guys, when they may reduce the cost, okay, so that they can increase the revenue, all right? Look here, they earn 70% of the revenue from the interest-related businesses, okay, in 1994, but declined to 60 by 2003, okay? And they also get the commission income, all right, okay, around 24%, all right, the commission, okay, in 2003, okay, and the rest come from the security trading, all right, okay, and they also stated here that the non-interest income, okay, that we discussed just now, non-core interest as banking system, is a reflection of the growing importance security-based financing, okay, by the firms, okay, they purchase the mutual fund, all right. All right, next, okay. How about the ROE? Okay, the return on equity, all right, increased from 9 to 12% between 1998 to 2000, right? But suddenly fell 9% in 2002. Okay, right. And cost income ratio fell modestly from 1995, okay, and then increased 66% in 2001. This is the performance of the banking system, okay? And from 2001, right, the productivity of European banking has improved. That's it. All right. UK banks have been more profitable than their neighbors, where they tended to have high ROE and excess return, guys. So we know, right? Okay, how this ROE works, okay? So how this company net income, okay, what is ROE calculate for, okay? They calculate for the company net income, all right? With their shareholders equity, how they can generate benefit from it. Am I right? Okay, so it's also stated here, UK banks had the highest level of profitability, okay? While Swiss and German bank being the poorest performance, okay? Why, okay? Why the German bank being poorest performer? Okay, so I do some reading. Okay, it's stated here because they have ultra low of interest rate environment. Okay, low interest rate environment at that time. Okay, that's why they are having the poorest performance. Okay, during that time. Okay, is it clear? All right. Of course, because the interest rate is not good, how the bank can generate more benefits, right? All right, next, continue. We keep repeating the same thing. Okay, British banks, okay, they perform well. Why? Because they get benefit from strong macroeconomic conditions. Okay, guys, buoyant means what? A strong macroeconomic condition. So that is how that is why they can benefit. Okay, that's why they perform well. Okay, and of lack of competitions, right? Lack of competition, and they have high profit in lending to small and medium enterprise. Okay, so they are also aggressive in cross-selling products, okay, and they mix pricing the strategy. So this is how this European banking they make what they did, all right, so that they can perform well, all right, and they focus much more on shareholders and wealth creation. Look, so there's so much point here. Okay, so first they get what? Benefit from a buoyant macroeconomic conditions. Okay, second they are having lack competitions. Okay, and they get profit from high profit from lending to SMEs bank. Okay, 3. All right, the third one, and they are also did what? Aggressive cross-selling products. Okay, and pricing strategies. Okay, and they focus more on shareholders wealth creation. So a lot of key point here. All right, for the slides. Okay. All right, next. Guys, any questions so far? Am I too fast? Hello, 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 hello. Hello, guys. Are you still there? Am I too fast? Is it good? Any questions so far? Good, thank you. Mark Junwei. How about the rest? Good, thank you. Wang Junyong. All right, Shen Hui, thank you. All right, can we continue now? All right, next. Now we look on the regulatory environment, all right? All right, of course, it changed in regulatory, all right? Then they implemented in various pieces of European Union legislation into the banking law. Yes, all right. Okay, so most recent legislation, okay, they have this in 2001. Okay, when the legislation is changed, okay, of course they give a big impact in restructuring for domestic merchant banking industries. Yes, okay, it's all about the rules. Okay, so it gives the impact. All right. All right, investment banking and securities business in UK dominated by major US bulge bracket firms. Okay, next. All right, the regulations. Okay, guys, what is the regulations? We discussed earlier. Changes or removing, okay, the regulations. All right. So what they did, okay, single European market for financial services. Why? Okay, to promote the competition of the market. Yes. Okay, to increase the efficiency, okay, and soundness of banking system. So that's the things, all right? And next is the financial services action plan. Because of what? Okay, to promote, okay, more competitive and dynamic financial services industries, okay, and to enhance the economic growth. Yes. So what are the objective of this financial services action plan? Okay, to establish single market, all right, making retail market and strengthening the rules of supervisions. Okay, so this is the regulations and regulatory. Okay, to achieve these 2 points here. Okay. Uh, all right. And the third one will be the obstacles. Okay. The obstacles on this is the creation of a single European market. All right. So when they have the price differences, it reflects the array of factors. It reflects varying degrees of the competition. Okay. And lack of cross-border in retail products. So when it happening, so it will have this price differences. Okay, for these three. Okay, next. All right, development in retail financial services, guys. What do you understand by retail financial services? Yeah. What do you understand by the retail financial services? You have to know first, what are these products? Then you know how to answer your questions later on. What do you understand by retail financial services? Guys, what is that? You know, corporate is for companies. Retail is for what? Retail is for, if corporate financial services, it is for, they provide loans for a company. For retail financial services, they provide to whom? Guys, they provide to whom? To consumers, right? To individuals. Guys, are you with me? Guys, clear? All right. So retail, they provide these services for consumers. Okay. Consumer banking or personal banking. Okay, clear. This is for consumer. Okay, consumer. Okay, or personal banking. Okay. Okay, for what? Okay, to manage their money, like what? Saving, mortgages, all right, personal loan, debit card, or credit card. That is the retail financial services they provide for individual. Okay, so it's stated here, it increasingly important segment in European banking businesses. Right, it's increasing because there's a demand for personal banking, all right, for saving, mortgages, to buy a house, okay? So they provide wide products and services, okay? So now it is a normal norm for banking operating throughout Europe. Same goes to Malaysia, lah, right, guys? So you just think of that, okay? And they also have ATM and EFT post network are commonplace. Guys, EFT post is of somehow it's just like the machines, just like the ATM machines. They use this EFT post, okay? We have here in Malaysia ATMs, right? Okay. And many provide advanced phone and internet banking based banking services. Okay. So now everything is online banking. Every banks need to increase their securities on the internet banking so that people will use it without any doubt. Am I right? Okay, with a trust. Okay. All right. Some larger banks offer sophisticated private banking. Okay, like we discussed in your tutorial slides. Okay, private banking is what they provide this for the wealthier clients. Okay, whereby they have 100,000 to 1 million of the liquid financial assets. Right. So what they need, okay, what they did, okay, they also provide the retail insurance and pension products. Okay, are the norm in many systems. Okay. Global private banking business is worth around 20 trillion. All right. Okay. Offshore assets have grown 6% annually, and the trend is likely to continue at this rate to 2010. Okay. So our books is quite outdated, right? So that's why they are discussing on 1990, 2010. All right. So that's the things. All right. All right, development in retail financial services. Okay, so the demand for private banking. Okay, remember it's only provided for wealthier clients. All right, here, right? They have 100,000 to 1 million of liquid assets. Okay, okay. Now it's much driven by growing prosperity. Okay, high GDP per capita income level. Okay. All right, the demand for private banking services is linked to intergenerational wealth transfer and pension. And they also have this retirement provisions, okay, wealth transfer, okay. All right, so the target for the mass affluent market. Mass affluent market refers to whom? Refers to those who wealthy clients, whereby they invested 50,000 to 500,000 of stocks. Okay, so they have they are wealthy client that we call as mass affluent market. Okay, look, they fund. Okay, they fund as individual with 50 to 500,000. Okay, fund to invest. So that is mass affluent markets. Okay, wealthy clients. Okay, whereby they invest. Okay, 50 to 500,000 of to invest. Okay. All right. All right. Private banking that we discussed earlier. All right. So they offer to what? To high net worth individuals. Okay. Guys, so what are the products that these wealthy clients needed? Okay. They need what? A wide range of wealth management. Like what? like investing and portfolio management, tax services, insurance, okay, trust, and estate planning. So this private banking, they provide a wide range of wealth management, okay, under one roof. So they provide everything, okay, like what earlier that I just discussed with you, investing and portfolio management, okay, tax services, insurance and trust, and also estate planning. So they provide everything here under one roof, which is the private banking. Okay. And they also stated here they have a large and profitable market, okay, and they can offer you a multi-product offering that we discussed earlier, like what? Tax services, insurance, portfolio management, okay, estate planning, trust, and investing. Is it clear? All right. All right. Next, corporate and investment banking. Of course, when you are talking on the corporate, of course, they provide products and services to company. Okay, they provide product and services to company. Okay. Of course, when you are talking on the company, it is because of the related to business cycle. Right. So banking, the bank will provide what? A variety of specific money transmission, okay, to facilitate the need of the company, the firms, okay, the company, all right? So payment services are primarily provided by means of a business current account, which give firms, all right, access to a variety of specific products, okay, specific money facilities, okay, right? And also have this here. Firms may also seek more sophisticated cash management and treasury services from their banks. Okay. Of course, when you're talking on bank, they did what? They need to borrow money, okay, from the financial institutions to what? To run their businesses, to run their businesses, all right, so that they can employ, okay, they can offer numbers of employment, okay, so they can run their business activities, so it can generate the economy. All right, any question? Now we're done. Any question, guys? Thank you, Jun Yong. How about the rest? Guys, please reply something on the meeting chat here. What is F? So far, so good. Oh, ayo guys. Okay lah, so far so good also can. Alright, so wait for your attendance. Okay, guys, next week is public holiday. Alright, so no class for next week. Next week is yes, now I know it's so far so good. Okay, thank you. FSSG. Okay, later I will use FSSG. Alright, guys, so next week, public holiday is Hari Raya, alright? Hari Raya on Wednesday and Thursday, alright? So no class for lecture for next week, okay? Friday, we still got class. Friday got class, yeah, guys? Friday got class, is it okay? Just because it's still Hari Raya, so we make a short class, but still got class. Is it okay, Wan Jun Yong? So for lecture, we meet you back on week 12, right? On week 12 lecture, okay? Week 12 lecture. So for your last topics, okay, topics 10, all right? Thank you guys. Happy Hari Raya. And what do you mean by same no class? Sir, can show QR, okay? Haven't show, all right? So next. Next week, no class. Okay, for lecture, we see you back on week 12. But for tutorial next week, because it's Friday, right? Yeah, so we have class tutorial. Only for lecture, we meet again for week 12. Is it clear? Wait, Nicole. All right, good. Thank you, guys. Thank you for your wishes. And happy holiday. Wait, all right. Attendance event. Search. Add. Oh, I need to add, Is last hours. Huh? Last time 11. Is it like this? Save. Okay. Guys, try to scan. Can or not? Eh? Hilang already. Guys, can or not? All right, good. So guys, I'll see you back on for lecture for week 12, yeah? Week 12, we still do it online, okay, week 12. Tomorrow we have tutorial class, right? And next week also have tutorial class, okay? Only for lecture, we public holiday for next week. Is it clear? Right? So I guess that's all for today. Thank you very much for your commitment, okay? For your attendance. Then thank you guys. Selamat Hari Raya too and happy holiday. Finally, a month of fasting will end next week. Yes. Thank you guys. Thank you. Thank you for your wishes. Bye bye guys. Thank you. Happy holiday.